Welcome to Lithium-ion Rocks, part 2 of our interview with Javier Martinez of Morgan Stanley. We'd like to remind all our listeners, if you like this content and would like to contribute to it and future content voluntarily through the Patreon platform, please visit www.patreon and input Lithium-ion Rocks. It's fairly easy to, through PayPal, your credit card to register for any one of the tiers. Higher tiers get special privileges. You can look at them, direct access to Rodney and me, and also our supply-demand model and other information.
Do you feel that European OEMs and the like would not see some value in having diversity of supply chains? So not relying overly heavily on just China?
I think that what I think is that there is a big fight there globally about different value chains, including this one, and which countries, US, Europe, Korea, Japan, China, is going to be taking a market share going forward, no? And this is a fight not for the next year, this is for the next decade, no? So, and that's but that's also important for lithium, because at the end of the day, that means that what matters is not only economics. There are other things. No, it's not only about the economics of lithium. It's lithium inside of a value chain and the economics of that value chain, and the different reasons that different countries may have to support or not in that value chain, no? And lithium just gets inside of that fight, no? So at the end of the day, whatever happens, and I guess can be only another guess, is that there are other reasons other incentives to control and to produce lithium other than economics. So it's not only about the economics, it's also about different countries, and you are seeing that. It's relatively simple to see that big companies from some of those countries are making big investment to have a say on the big producers globally, no? Regardless of economics. If they are looking for not only to make a business, also to make a business probably, but also to have access to raw material, no? Not only lithium, but you see that on copper, you see that on different minerals, no? That's part of but that in reality, that's even more bearish lithium, no? So that means that there are people that are looking at this not only based on economics, but also based on have access to a raw material, no?
Do you think that what carbon emissions are for cars, do you think within time they're going to move up the lithium-ion battery supply chain, look at the impact and carbon footprint of suppliers right the way along the chain?
I think that that's where the world is moving. So the world is moving for different reasons into giving incentives to green energy, to more sustainable sources of energy, etc., and that's one of the reasons why lithium is so interesting, no? Because it's part of that technology and it's part of the solution, no? Now, how fast or how slow will depend on a number of moving parts, and that from the origin, that was also one of the reasons why Morgan Stanley had a different view on demand, no? And one of the reasons is that our auto team models cycles. So it's not only about penetration of electric vehicles, it's also about cycles of auto demand globally, no? And that demand has to do with GDP, and now we are seeing a good example, no? So now global GDP is slowing down, and that has an impact on the global demand of autos, but also has an impact on the incentives, no? So when you have in different economical and political situations, you have different incentives, but basing the future of an industry on incentives, modeling, assuming that whatever incentive you have today are going to be there forever, or that you are always going to have incentive, is a mistake, no? In our opinion, and that was another mistake from part of the market that was assuming that the subsidies in China were going to be there forever, and etc. No? I think that it's good to understand that that's where we are moving, and that's and to model that, but being careful and not assuming that. So the economics of the business have to be there without incentive. Otherwise, everything becomes a little bit risky, depending on political incentives that at the end of the day depend on the budget of the governments and politics and et cetera, is complex. Now, particularly, you ask about Europe, it's being a noisy thing, no? When you see the press, I was reading this morning the press in several countries in Europe, and the press was mentioning how the different parliaments are changing the wording of some of those rules that are being discussed, no? So I don't know. I think that's where we're going. We're going into more support to green, sustainable energies, but how fast? I will assume that everything happens slower than the market thinks. That has always been also another reason why we were forecasting less demand, because it's not only about what makes sense, it's also about people don't like to pay for that. So it's about the evolution of technology that allows to move in that direction without having an impact on the pocket of the consumer, and these kind of things. No, and AB also, at the end of the day, yes, everybody wants to have. I want to have an electric vehicle, but listen, I want to go to the beach in the weekend, and I don't want to get stuck in the middle of nowhere because I cannot recharge my. And that's also something important, because when people doing estimates, they tend to live in New York or in London. And listen, and I look at Brazil; it's a big country, so we may have here the infrastructure to recharge vehicles in Sao Paulo, but what happens when I go outside from Sao Paulo? So it's going to take some time. Everything always takes longer than everybody thinks until we reach a point where everything goes faster, no? And that's a different, that's one of the reasons why we estimate 700,000, slightly below 700,000, and not 1 million ton in 2025. But again, not to get lost in the trees, we think that is irrelevant. What matters is not that. If you keep focusing on demand in a range, inside of a range, you are looking at the wrong side. You have to look at supply. If the demand goes completely out of the chart, and we are talking about more than 1 million ton in 2025, then yes, it matters. But below, in that range of 701 million, that is, again, the small moving parts of politics here and there may influence to be a little bit higher or lower. We continue to think that we continue to be the low end of the consensus, and we continue to believe in our estimates. We think that everybody else is a little bit optimistic in those moving parts, but it's not that relevant.
Biggest question, or the most contentious thing, is this supply. Like, that's 300,000 incremental tons of supply in a 6-year time frame. That if you're wrong about SQM's ability to ramp up 4 times in 6 years, which I think is relatively unprecedented, and there is a technical and an environmental consideration, in connection with that. If you're wrong about their ability to do that, right, then there's going to be a shortage, and a price spike.
So I think that Howard, I think that the right approach here is the following. So try to put yourselves in the process of the decision makers. So imagine Howard now becomes the Minister of Mining in Chile. So there is the decision makers on regulation and how we create an environment for the companies to deploy capital and to create wealth for the country, etc., etc. And then Rodney is now is going to be wearing the trousers of the CEO of SQM. Okay, so now you both know that you have the following equation, both of you. You know that, and then we can, if you want, we can discuss about these moving parts. But let's assume that those are right, and those are our starting points. First of all, you have illimited resources, both of you. So Chile has enough resources, and SQM particularly has enough resources to supply the global demand forever. We can discuss about that. Imagine, give it for granted. So you have illimited resources. You are low cost, and you are low capex. So now I move the question to your side. What will you do? And then I have to assume that people are rational. Obviously, you may say, no, but people are not rational, and then this or that. But listen, it will be really good for Chile, and it will be really good for SQM. If I will be there, if I will be the decision maker for Chile, the best thing for the country, and if I will be the decision maker for SQM, the best thing for the company, for the shareholders, will be to increase supply, to regain leadership, to reduce prices, to gain market share. That's the way I see it. No? And now, it may happen or not. Obviously, we may have distortions and we may have a number of moving parts, but that's the way we think about this.
What if the environmental minister or the water minister or the indigenous people were part of that decision-making process? Does that influence? Because you're talking largely economics.
So again, we may be wrong because it's difficult to map this, and the way water behaves in the salars is quite complex. Okay, but our understanding is that the bottleneck is not at the mining side, it's on the industrial side. And that's an important part of the equation.
Okay, so if there's no environmental consideration whatsoever, it's just a function of SQMs being able to build a plant for carbonate and then build plants for hydroxide, battery-grade quality hydroxide. You're basically assuming they're able to, they'll get there, on the industrial side and on the hydroxide qualification side, and therefore within 6 years, there's no difference. There's little difference between their manufacturing battery-grade hydroxide and a producer of soybeans or ethanol, or aluminum in your prior comparisons.
I think that summarized with only one exception. So you said that there is no, so environmental is not is a factor. It is a factor. It is a factor, and SQM is obsessed about following the rules and to comply with the rules, and even above that. So environmental rules are relevant, and environmental compliance is very relevant, not only for them, obviously also for Albemarle, and it's very important in Chile. No? Chile is a serious country. Now, what I'm saying is that it's not relevant. What I'm saying is that there is room to comply with those rules and to be protective of the environment and to be able to deliver that supply. So, and that is helped by technology, and there are a number of complexities over there, but we understand, or we believe that it's not the main problem. You have to find ways with technology to make it happen, being protective not only of the economics but also of the environment, and that's what they're doing, and that's what the reason probably why things take a little bit longer, and that's may create some distortions in the short term, but in the long term, Chile and the Indians and the communities will be better if Chile is able to produce more lithium and capture that opportunity in the window of opportunity where lithium is going to be a relevant mineral. We believe that they should be able to do that, being very careful with the environment and to taking care of everybody. That is a win-win for everybody, not only for one part of the equation. We see how this can be a win for Chile, a win for SQM, a win for the Chileans, a win for the local communities. That's the way we see it. No?
Talked about an arbitrage in various markets. What I observe is Ganfeng, last quarter, the last 2 quarters, and China generally, but led by Ganfeng, have been exporting battery-grade material at higher prices, taking advantage of the higher price in Korea and Japan. So Ganfeng has doubled their sales, outside of China. In the same quarter, SQM, which traditionally was selling to Korea, and Japan more, sold onto Ganfeng's turf in China. I view this as a quality differential, right? SQM not yet making sufficient battery-grade hydroxide for those markets. And again, I said it before, I think to some degree kind of punishing, the lower quality, higher cost producers in China. What do you make of that?
Again, it's a commodity, and you have people trying to gain market share and people trying to go to those products and markets where they are competitive today, and then people investing to be competitive in what is going to be hot next year or in 5 years from now. No? So that's part of doing business in commodities. So you have now Argentina and Brazil exporting more soybean to China because of the trade situation with the U.S. that used to be the traditional exporter, main exporter. So and then tomorrow the situation will improve, and then they will have to. So at the end of the day, it's not about the demand or supply in this or that market, this or that grade, this or that product. It's It's about the global. This is a global product. Commodities, what commodity have is about global. So if you focus on what is happening in this commodity, in this and that market, this and that player, you lose the full picture. That may be driven by punctual situation, gaining market share, competitive advantage, FX, whatever. What matters is the global supply-demand inventories, not who sells to whom. What you are seeing now is, in fact, is a confirmation of our thesis, is that SQM is doing an investment to gain market share. And if you want to gain market share, where do you have to be? In China. And what kind of products are they selling? I guess that the products they are producing today and the products that they have a market today and the products. And now, that's not what is relevant. What is relevant is what is going to be happening in the future. And again, our thesis is that with prices below $10,000, that increased the competitive advantage of Chilean producers, and they are going to be using that competitive advantage to do what I will do, is to gain market share, making better earnings. So they're going to do better earnings because they're going to be selling at slightly lower prices with selling more volumes. And then the equation of prices and volumes at a given point start to be positive for EBITDA, for cash flow generation, for the country, for the shareholders, for et cetera, et cetera. Now, today, again, you can have small distortions of that. Those are trees in a forest. What matters is the forest.
You mentioned aluminum and history there. So in hard rock, lithium, there has been some comparison, of the bauxite to alumina to aluminum, and then kind of specialty alloys, et cetera. What I view that as a more realistic comparison than just comparing something to soybeans, or ethanol, as you describe it. I don't know those markets so well, but aluminum I know a little bit about, and iron ore I know a little bit about. But you were mentioning aluminum and how that market's evolved, and that's viewed as a commodity as well, right? Those prices are not performing well. So what? And China overbuilt, aluminum, I remember, years ago. So just what from aluminum do you see as parallel to lithium?
So here we are entering into uncharted territories. Why? Because we're talking about technology, and technology that is not there today is about the future of technology. In fact, you were in Santiago, no? We met there in the Lithium conference, and there were a few panels, really interesting panels, people claiming that they already have the solution for this or that kind of producers to be lower cost, no? So there are already people claiming. I don't know if it is true or not, but probably there are already people who have some solutions to impact the cost curve. But what the logic is a conceptual logic, no? For any commodity that is a specialty, and lithium was a specialty. So what does it mean a specialty? It's a small thing, and it start to become something bigger, and then there are more incentives to invest to improve the technology, no? When it's a small thing that you have only 2-3 players that they are making a lot of money because nobody's looking at that, then you have different dynamics. And then eventually that commodity, whatever it is, start to become bigger. And bigger means bigger volumes. And when you have bigger volumes, you have bigger amount of dollars. And when you have bigger amount of dollars, there are bigger incentives for people in the value chain to try to make a business out of that, no? And that's what has happened with every single commodity that has become relevant, no? And that's why technology tends to move that. And happens with every single one. If you take a look, this is something I learned 15 years ago. That was a surprising finding for me. And it's important to keep in mind. When you look at almost every single commodity in real terms, prices go down through cycles. So prices go up and down, but in real terms, they go down. Why is that? Because the cost of production goes down with time. And why is that? Because of technology. Now, each commodity has different dynamics. In the case, for instance, of grains, it's relatively simple. You see that what drives demand and what drives supply. And again, what matters is supply. What matters supply is area, how much area is planted globally, and yields. And yields are driven, so how much you produce per square mile or square meter or hectare or whatever. And yields are driven by weather and technology. And the use of technology for almost every single agricultural product globally, particularly the big ones, is increasing half a point every year, between half a point to 1 point. So the productivity of 1 hectare globally is increasing almost 1% in every grains just because of technology. And that has been the case going in the past, and that will probably be the case going forward. And why is happening that? Because it's so massive, the market is so big that you have a lot of companies with incentive to invest, to develop that technology, and to make out of a business out of selling that technology to the producers. Well, that was probably a small business when lithium total market was 100,000 tons. That's an important market if lithium volumes go to 700,000 and eventually to 1 million tons and eventually to 2 million tons. No, so there are people already investing, and gradually there will be more people investing in that. And in fact, as prices go down, the capex of the companies should move from expanding fast into producing at a lower cost. So you're going to see more money on the table because the market is becoming bigger and because the players have an incentive to invest more money in those providers of technology to reduce costs. No, that's coming. It's going to happen. Now, how far that can go, who knows? It may not be obviously. Aluminium maybe is an extreme situation, but that happens in every single commodity. So it's going to happen.